Host, Josh Appleman, founder and CEO of Appleman Capital. Today we're joined with John. John is a multifamily investor and a syndicator, excels in sourcing and upgrading properties in emerging markets, focusing on community improvement and tenant satisfaction. John, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Sure. Thank you, Josh. I appreciate the invitation and glad to join you and share a few things about me and hopefully add some value to listeners. My background has been a lot of information technology, but real estate in the last 13 years. I've been buying multifamily. I started off buying small multifamily and then gradually bought bigger and then learned the syndicating or really pulling other people's money along the lines and learn the benefits to all of us, to people who join in deals and to people who bring the deals together, and really to the tenants and other people in the industry as well. I've always been focused on trying to share and teach as I learn, and it's because other people did that with me. I learned so much from the people earlier on who were just so generous and sharing what they knew and how they got into it and things I should be doing or people I should be talking to and it's the least I can do to do the same. I love going out and looking for properties and and doing the initial analysis on them, both financial and physical, and joining with other people. I spend a lot of time looking for the right people to join me on deals and go to a lot of different places. It's just it's a great industry to be in. It really is. There's just so many nice and helpful people, and I'm excited to be here and just always passionate about looking for more good deals
Yeah, for
all around
sure.
the country.
Absolutely, and there's not a better time to buy than now, and in my opinion, just with how things are, it's I think with real estate, you make your money on the buy, and that's just the way it is. It's and sometimes if you can buy in the dip, at the right price, right timing, help the sellers out by buying their property, it works out good for everybody. And I liked what you said about as far as mentors, because a lot of times coming along the way, you don't realize who your mentors are just by listening to people and how they act and how they do things. And you reflect back and you find out that those mentors were teaching you a ton, just not even knowing. So it's good. So what markets are you all looking to invest in?
Yeah, another quick comment about mentors. Yeah, the thing about them is that they come from surprising places, and
Yeah,
they're not always people who are older or more further along in business or who look more polished or anything like that. It's just that they could come from anywhere. I've had mentors who are just the least likely mentors, but you talk to them and you realize how much they know, and they're smart people, and and then you learn from them. So absolutely, yeah, there's a lot of opportunities. So no, the markets I pursue now are mainly in the Midwest. I like the Southern Midwest here. I like the South in general. I was looking and spending a lot of time in the Southeast states like Carolinas and Georgia, Tennessee, and had some success, but they became super competitive. And more recently, I have had better success in uh, states a little further inland, like Kansas, Missouri, Oklahoma, Arkansas, Kentucky, those places, the major metro cities in those states, because they have population growth, they have job growth. There are a lot of great companies moving there and opening up job opportunities. There's space to grow. They're cash flowing properties, and they are real estate friendly states, which not all of them are unfortunately, and you can find um, opportunities where that aren't super competitive and are still paying cash flow and still you know that you can sell it when after a few years after you've owned it, and you can make some decent money off of it.
yeah,
Places that have been taken care of for a long time, maybe by the same owner, and the owner liked having residents just stay there. They didn't like raising rents. They didn't like going in and doing a lot of renovations. Old classic units, but still healthy occupancy numbers, and those are ideal. I mean,
yeah.
there's a lot of them still around in these Midwestern states.
Yeah,
That's
I'm
right.
I'm local here out of northern Kentucky, just outside of Cincinnati, and
Ah, yeah.
Midwest. And you're right, it's steady Betty, and and I mean that by the past performance equals future results because your occupancy is typically higher. Cash flow is typically higher. You're selling at a conservative cap rate, not no sub fours. It's just steady all the way around. Your cost of living, your just living in general is just it's steady and job
It is.
growth, Fortune 500 companies. You don't have your erratic upswings in population and job growth like a lot of we'll see in the Sun Belt states, and then you don't have your erratic downswings neither.
Mhm.
Usually slower to see changes in say inflation, slower to see changes in rent increases. I mean those things obviously are coming and have come, but it's slower to see those changes. But great place to live and invest for sure.
Yes,
Um,
recession resistance. I mean,
correct.
nothing is recession proof, really. But when you see the big drops that some of the most um, uh, the highest flyer cities, I should say. I mean, the red hot cities like Dallas and Phoenix and
Yeah.
Atlanta, Tampa. I mean, they're great markets. They really are. Uh, they're going to be the ones that are hit the hardest by higher vacancy numbers and more reductions in rent. That's what you're seeing today,
Yeah.
and those kinds of changes are not going to hit these Midwest markets nearly as badly. They grew super fast, and then um, they're going to be dropping pretty quickly too. Not that they're bad markets, and the drops in those markets are great opportunities to buy today. But I just like something a little more steady and predictable, but still a healthy growth market.
Well, and you have absorption shock too, because if you've got consistently 30,000 plus units coming online, new units year over year in a certain area, I mean, you're going to have a point in time where your occupancy just cannot reach over, say, 55, 60% because the people aren't there yet. So future growth
Yeah,
will be there, but you've got, there's always there's a ton of development and, it's great to get in those markets early on, but if you're getting in after the herd has showed up, it can spoil the good investment pretty quick, in my opinion. Um,
Yeah, and not only that, but what you're seeing today is not only the aftermath of high interest rates. We've had them just climbing all last year, and it just took a lot of people out of the market. It brought a lot of owners to the market because they're in financial difficulty. They've got a loan that they can't refinance out of, and that was part of their business plan. But you're also seeing, like you say, a lot of new product coming to the market. It started 1 year, 2 years ago, and it's well into development. It's now being completed, and a lot of units are being put on the market, and the market cannot absorb it. And that's going to continue happening. You can see it. It's one of the most predictable elements of real estate is what's being in development, what's in development today, and when's it coming online. You can see it coming. You can measure it, and there's statistics for all these big cities. A lot of it is still coming to the market
yeah,
last year and into this year, well into this year. However, uh, it's likely that not a lot is going to come into the market in 2025, 26 time period because they'd have to be starting today. And not a lot are starting today. The interest rates are high. Builders are having difficulty. They're not starting as many projects. And so if you're a buyer today, take advantage of the distress and get in there. Owners want to get out because there's too much product coming to the market. Great, buy their properties. A couple of years from now, there's not a lot coming to the market, and you're going to be in Fat City.
yeah, yeah. No, and that's the saga of these cycles in real estate. The developers quit developing, and then that puts a pause on new units coming online, both new homes and just apartment complexes in general. But it's the wheel. It's just
Yes.
constantly going, which is good and bad, but it just depends on timing and what side of the market you're on. Um, so let's talk about your properties. You've got 270 units that you personally manage that you've got under you're the operator on, and then you're in 650 units as an LP. Is that correct?
Correct. Yes.
on the units that you operate, tell us about your structure, how you handle the asset management and the day to day.
Yeah, yeah. I mean, asset management really is one of the keys to the success or failure of your property. And I would say up front, I'm not the best asset manager. I look for good asset managers on properties. I mean, I have partners that have worked with me on this, and they've been great partners. I've been very fortunate that they have been extremely competent. You need good asset managers. The asset management business is what keeps the property manager accountable. I mean, we have third party property management on all of them, and they are they are the people that you need to focus on. Your asset management job is to make sure that they understand your goals and objectives, your priorities, constraints, how much money you plan on spending on renovation, how much to spend per unit, what kind of finishes to put on a unit, whether it's LVP flooring or carpeting or all the appliance things. How expensive of a renovation do you want to do on a unit? Your property manager needs to know that. The timing of turns in a unit, how long is it taking them to turn a unit? How are they going about finding a new tenant for a vacant unit? How soon do they market it? All those things. You've got to put your metrics in place, and you need to have constant reporting on your metrics, and you need to have discussions about the issues or about the exceptions or the numbers that are not where they should be for the metrics that you have set up for your property manager. There's a lot of asset management tasks, and some of the other ones. I mean, they could range among a lot of different things, but you need people on your team who are ready to step in and help with uh, for example, finding a contractor for a given task. One of our properties has some issues with some stairs and outside exterior stairs where they're starting to not be as stable as they should be and need some repair. And our property manager knows of contractors, uh, but we just weren't getting a lot of good bids. And so um, I was able to go to other sources like Facebook groups and contact people in that market and say who are the good contractors and come up with a few more names and have the property manager reach out to them and get bids from them. We did something similar with security systems, like one of us, me or one of my partners, is going to take the lead and make some phone calls, find out who provides security systems for apartment complexes and get bids on those. Those are all asset management tasks that we can help out with. We try not to micromanage or get too involved in things that the property manager is going to do on an operational basis, but when we can help out in that area, then we certainly do. Um, and so, yes, partnerships are the key to the performance on any of these properties. We have partners who are phenomenally competent at investor relations, about communicating to investors, getting the reports pulled together on a timely basis. So whatever it is, end of the month, beginning of the month, that data is there. It's compiled into the right charts and right information that you report to your investors. That the informational content is accurate. It's providing what investors need. They want to investors want to know what's going on. They don't want to be over inundated or overwhelmed with information, but there's some information there, and there's opportunities for them to get more if they want to dig into it. That's a big part of keeping investors happy and bringing investors back to your next deal. Hopefully they like what they saw, and definitely the performance of the property. How well was the financial performance? That will bring them to the next deal. And then there's a few other roles that the team members play, like um, the lender relations and um, uh, just making the financial part of it, the bookkeeping And if you have an outside accountant or bookkeeper, just making sure that the information is it gets to them on a timely basis, and your books are current and accurate. And
Yeah, yeah. Communication is everything, and it's not hard, and it keeps the wondering mind from wondering.
yeah,
It's just small little incremental updates, whether it's weekly, bi-weekly, monthly. I think on a value add strategy where you're going through renovations and going through kind of
yes,
a shock at first. Every complex goes through a shock if it's a heavier lift, and
uh-huh,
just touch base and say, hey, look, here's how many units we have down. There's a vacancy. Here's our renovations. Unit 1, 2, and 3 are complete. Just something that just does a summary of where it's at, and just carry that on through the business plan as you execute it, and that goes a long way because ultimately communication is key, and it's their investment too. So makes them feel
yeah.
good, makes them know that everyone's still alive and doing well as well on that front.
Yes,
Uh, but
and problems, they you can't not report problems. Investors almost expect to hear about problems, and if they don't, if a year or two goes by and they're not hearing about any little issue that went on, they're kind of wondering if you're holding information back, uh, because this is a very a personal investment on their part. It's not buying a stock or a mutual fund. It is an investment in a single property, and there's activity on the property, and there will be things like crime. There will be tenants who don't pay. There will be pieces of physical structure that break down. There will be unexpected events on that property. And it's your job to keep your investors up to date. And the level of detail you choose to provide, that's up to you. But basically, investors want to know and they understand. And it's a particularly good story, actually, if you say we had this problem and here it is. That's your report this month, and we're working on solving it. And then the next month you can say we solved it, and this is how we solved it, or 2 months down the line, or something like that. That's a good story to relate to
yeah,
investors.
and problems are opportunities to solve. It's
Exactly.
that's the story of the entrepreneur, finding problems to solve, and making it better. And the problem, if it's the community, it's not a place somebody wants to live. Well, that's a great problem to solve. People not paying rent, we can solve that problem too. It's just you've got to take those
Exactly.
steps, and nothing's perfect. And you're shielding the investors from the day to day, but it's what we sign up for. It's the fun of it too, in a sense.
Mhm.
So when you're analyzing properties, you're analyzing the area, you're looking at other properties, other comps. How are you finding out if it's a good deal or not?
I'm doing the things that you just said. I first will look at the area, the general area, and like for example, if a broker says, "Hey, this property is newly became available, off market or on market," I'll look at them all and sends it to me. They know my general buy box, the kind of things that I'm looking for in terms of number of units or dollar value or uh, or type of apartment complex and general area, those kinds of things. They send me something. Well, I'll look at the materials, but I'll also look at the address, and I'll go to Google Maps and Google Street View and go up and down the street, and I'll try to see as much personal as I can about it, what the property in general looks like. And it's a great perspective. A lot of Google, as anybody knows, is the pictures may be recent or they might be somewhat old, but at least it gives you a better perspective and the aerial view. What's it look like from the top down? All those things. But physically, what does it look like is one thing. Next is what are the rents like? That's a little harder to determine. Um, Good high-end top tier brokers will do a good amount of research on that, and they will tell you, they'll provide you maybe 5 to 10 comparable apartment complexes in that area, what the rents are for your type of rent, unit type, 1 bedroom, 2 bedroom, approximate square footage. They'll tell you what the rents are. That's good information. It's not necessarily highly accurate because they want you to think that the property you're looking at is very low rents compared to everybody else. And that may be true, or it might be that they picked unit properties with higher rents. So you got to do more research. You got to talk to property managers. You have to look on apartment rental sites. There's a number of different ways. You can even um, uh, initiate your own apartment rent survey, and I do this frequently. I get somebody to call and be a bona fide, legitimate renter and call into the other places and pick a few nearby properties and ask them the questions about rents and availability and amenities and all those questions about the units to get a better feel for what the comparable rents really are in that area. Um, if there is rent upside potential, and this is a big if because a lot of times there's not, then it's something I can move forward with. If there's not much there, then I'll probably pass on it. I need to know that if I'm going to spend the money on upgrading units, renovating them, and making them look real nice, I expect to be able to get a substantially higher rent from it, more than just 50, 75 bucks or so. And and so those are important criteria. Can the property be made to look nice? It might be an ugly property, but there's a lot maybe that can be done to improve the curb appeal, maybe painting the siding, maybe resurfacing and striping the parking lot, you know, landscaping. There's a lot of things that you can do to make it look nicer. And so those opportunities need to just jump out at me pretty early on before having even visited the property. Uh, I need to know what kind of retail is in the area, and what the streets look like and what the homes look like in the neighborhood. I need to understand demographic data, household incomes, housing values, and population growth. Although population growth is not a very accurate number. You're going to get a general population growth of the city, but it really is not going to address that particular submarket. I need to know that there's nice retail moving in. Something like a Target or a Starbucks, Bed Bath and
How do
Beyond.
you you're looking, sorry to interrupt, but you're looking at the
Yeah.
path of progress, and I like that. So how do you determine if there's retail moving in before everyone else knows that?
You if I don't live there, and I don't, I live in Seattle, and just to kind of be clear, and I buy in the Midwest, so I don't live
Yeah,
there. I visit my markets and I get to know them as well as I can, but I don't know all the streets in every neighborhood. You've got to have brokers that you can depend on
yeah,
who understand what you're looking for. The brokers, um, they're rating the market, and they should have a good sense for how for these things. If there's nothing there, if all that's on those streets nearby are, you know, I I don't want to disparage certain types of industries, but the tattoo parlors and liquor stores and pawn shops and auto repair shops and those kinds of things, they're great. It's great to have them nearby, but if that's all you have, then it's probably not a great area. You need to have the other retail somewhat close, within I don't know, a quarter to a half a mile or so, and
yeah,
a path to progress. The broker will know of of a large like retail operation coming in within a couple miles or so. That's great. I've got a property in um, the Kansas City market, just south of Kansas City, in the greater Overland Park area, a little outside Overland Park. And about 6 months or so after I bought it, I didn't know this coming into it, but 6 months after I bought it, um, a a large manufacturer announced plans to build a new plant about 8 or 10 miles away, not right next door, but pretty close, that was going to employ several thousand people. And this was massive for my market, a great stamp of approval for the market, and other businesses will come in. Those kinds of things, maybe a broker knows about that or a property manager. They got their ear to the ground, they hear about those things, and so you want to be talking to them and
yeah,
understanding new businesses coming in.
yeah, 100%. We like to on the rentals for the area, the rental rates is like to look at what HUD's publishing year over year as well.
Oh
Um,
yeah,
they
yeah.
they pop out a ton of statistics. They gather a ton of data. what is what's the increase that HUD's pumping out that they say is deemed fair market value for all included for their rate, all included with utilities, and we'll comp that against what other properties are doing. It's just but it's a balance as well as median household income, not for the sub market, but in general, you can tell a lot by what that zip code is on a household income level, and that'll
Yes.
kind of tell you if it's worth bringing investors in or do a little risky and buy it yourself and see if you can turn it around. So it's
Sure. Yeah.
can go either way. Uh, so let's talk about investors. What would be your ideal investor?
An ideal investor is somebody who has taken the time to understand real estate. I mean, for me, you don't have to have already done a lot of real estate investing. Um, that's not necessarily a criteria for making us a good fit, but I do want to know that you've spent some time thinking about it and learning about it and understanding what real estate investing is about, not just all the great benefits which we talk about all the time, the cash flow and the asset appreciation and tax advantages and doing nice things for the tenants and building new communities. All that is terrific stuff, but you need to know that there are risks. There are some downside to it, potentially. Hopefully not in most cases. I can I could say that my properties have all done well, but I would not ever put a guarantee on that because things happen to properties, and an ideal investor is going to have understood this. And so I try to network a lot, and I go to networking activities, and I try to focus networking activities a little better now than what I used to. But I've been to a lot of them in the past that are strong business people that they're smart, they've done well, they're successful, and they understand business. You talk with them about real estate, and and chances are low that they take an interest in it because they haven't given it much thought. They don't really. It's not something that they took interest in before, and that's great. More power to them. I like to go to activities where somebody has already decided that real estate investing is a great opportunity and it's something that they want to learn more about and do, because that's an area where that's where I can step in and help them and help them understand which direction they might want to go, not selling them on me or my opportunities or anything like that. My goal is to help them understand, to teach and educate, and send them in the right direction, the direction that's best for them.
Yeah,
And
yeah. Real estate is delayed gratification, but if you have somebody who knows real estate, knows that it's brick and mortar, it's able to you can go out there, see, feel, and touch it. It's not the stock market. It
yes,
also it's a wealth builder. You have it on your balance sheet. You can utilize that in order to help offset some other things as well. You have your
yeah,
depreciation, debt pay down. Your hopefully the place it's in a place that appreciates. So it's having someone who may not know all the benefits to real estate, but is willing to learn. They're patient, not using college funds to invest in real estate. It's money that they
mhm,
would need, but uh, money that they want to invest in and watch it grow.
yes,
We're totally in alignment with ideal investors for sure.
yeah.
Um, very cool. So, as far as your properties, where you're at, where you all invest at, I mean, we totally agree. The areas is steady. Um, where you see yourself in years to come? As far as how big are you wanting to get your portfolio and expand out?
But I don't have these 10x goals like a lot of people do, and I mean I admire people who have them. I balanced my life. I spend a lot of time doing real estate, but I have a lot of other varied interests as well, and intend to continue doing this. I'm in this for the long term, and I think it's uh, I mean, I have a mentality of I am helping people when I'm bringing them into an investment. It is not selling them on something. It is helping people achieve their goals, and I get a tremendous amount of satisfaction out of that. And I've already helped a number of people move along in their wealth creation goals, and I see a long term future in that and bringing other people in an organization. So you know, my goals are to continue buying more property, larger property, possibly expanding into some new markets. The markets that I'm in are great now, but they're not necessarily emerging markets forever. So there will be new markets, new opportunities, and my job is as an operator and syndicator to keep my ear to the ground and look for those opportunities.
That's it. Connect capital to deals and help people out. That's for sure. Very
Yes.
good. John, if somebody wants to get a hold of you and learn more about yourself and Cardinal Oak Investments, how can they reach out?
Uh, a couple different ways. An easy website to get to is learnaboutapartments.com.
Nice.
Learnaboutapartments.com. My email is johnjohn at cardinaloak.com. cardinaloak.com.
Very good. John, we definitely appreciate your time today. I look forward to following you, and we will certainly talk soon.
Thank you, Josh.
All right.
Appreciate
Thanks,
it as
John.
well.